Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 5th of May. All right, we've had the RBA, the Fed, and the ECB come and go, and we aren't left with too many answers just yet. And I want to sort of explain what's happening because there's a little bit of distraction with what is happening on the US dollar. But for now, instantly, the US equity futures up. And we are seeing Euro, Sterling, Aussie move to the top side, and the dollar pairs move down. Now, this is a classic risk-on day. And you should be confident if you are trading or looking for opportunities that this, to me, is a go, 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 right? Now, at the moment, it doesn't look like there's many opportunities where the instruments are, but we've got uniformity on the currencies and the equity markets, right? They're connected. We know exactly what's happening, and that should be a confidence building thing, right? We're through the central banks. It's not exactly clear what's happening, or what's going to happen. But let me just explain to you, this is where things connect, because if I look technically, I can explain it a little bit better around what is happening. Now, if I come back to just have a look on the hourly charts, okay, you can sort of see the dollar index is sort of right back to almost where it was. Okay, dollar yen's gone for a dance to the top side. This would be a bit of a safe haven play, as is dollar Swiss, right? Now, you've got to keep an eye on these two things because the dollar is moving down, as it should, following pretty much the end of the Fed hiking cycle. The only thing that is keeping the dollar a little bit with a bid tone, that's like a buying bias, is the fact that this regional banking issue in the US could blow up into a massive big thing. And that's going to impact global markets, and the dollar will go up as a safe haven. To me, that's the only thing that's in play. At the moment, though, traders are buying yen, Swiss. If I even show you gold, they're back into gold because there's a lot of uncertainty here around this regional banking issue, right? And we know the Fed and all the banking sector aren't exactly honest with how deep this problem is. So we've just got some issues here, right? So to me, take out the banking crisis, the dollar, right, should be heading lower. Now, the yen is doing its own dance, but dollar Swiss is a clear indication. At the moment, we are seeing a bit of a correction in dollar CAD, but most importantly, we are seeing Euro, Sterling, Aussie, and Kiwi all primed to go to the top side. This would support the overall end of the interest rate hiking cycle in the US, right? An extended period of US dollar weakness. And that's why I think we're just waiting for clarity around this regional banking crisis. If that clears up and drifts away, then we're going to see the dollar start to slide to the downside, and we should see Euro, Sterling, Aussie, Kiwi go up and the dollar pairs go down, right? And you can see this a little bit clearer. Well, if I look at the daily charts, you can sort of see where they're primed, okay? The Euro primed top side, Sterling. Now, Aussie isn't exactly primed yet, but it will start to gather head of steam with Sterling and Aussie. The central bank, well, they raised rates and they're still talking about more rates to come. And the Kiwi, Aussie and Kiwi are lagging behind Euro and Sterling. But if we get some strong numbers out of the Euro, that should be enough to start pushing Sterling, Aussie, and Kiwi up. And the dollar pairs, well, they should start drifting lower, like the dollar index and Swiss are at the moment. Dollar CAD is drifting sideways, and dollar yen pretty much caught up in that safe haven trade. So if I just sort of drift through, and I'm looking at some sort of key data today, right? And we do have the two major numbers. Well, there's actually the Swiss CPI numbers. You want to have a look at that. But the main numbers will be the non-farm payrolls, of course. Okay, understand there's a huge amount of data coming out. I can't see the US numbers at this point with this US regional banking issue being a huge influence, except at the time of the release, you will get a big discombobulation as liquidity pulls out and comes back in. You really need something outside this range on the payrolls number. And that's a big range, right? So under 94,000 or plus 265, you'll start to see the dollar move. It's probably short term. As I said, we're now focusing on the regional crisis, not the Fed. So the better trading opportunity today may well be the Canadian numbers, right? This is where you sort of switch over and go, okay, dollar CAD, right? So you look at their unemployment rate, the range of their employment change. Obviously, full-time will be a bit of a factor as well. This is something that you can work with. Now, piece that together with the opportunity there on dollar CAD, right? And if I come back to the charts, having a look at this on multiple time frames, right? We have seen oil drift back to 68.75, and the dollar, well, it's just drifting lower, right? As the dollar should in this situation, right? You look at long term, well, it's back in the range. Dollar CAD, right? The loonie is living up to its name, right? It's been difficult because of the influence of oil. Oil falling should have dollar CAD going up, but we've got dollar weakness, bit of CAD strength, and so that's what we're sort of looking at the moment. Today's Canadian employment numbers might be a short-term trading opportunity because at the moment there isn't uniformity across the CAD and the dollar at this point. Now, if I come back into the rest of the pairs, this is where you want to sort of anticipate the moves coming up potentially for next week and here on in. Now, to me, the Fed have hit the top of the hiking cycle. So the dollar index should be heading lower. And you can see here, it's just up against a support level. We go a bit lower, there's nothing in the way to stop the dollar falling. And you need to be aware of that. If you come into dollar yen, well, it's doing its own thing. As I said, bit of dollar interest, bit of safe haven. It's a little bit tricky. Dollar CAD, not exactly breaking ranges. Dollar Swiss is the big one that you've got to check out, right? It is moving lower. Short term on the hourlies, dailies, on the weeklies, it's heading down, and also on the monthly chart, right? The dollar Swiss, safe haven, yeah, sure. But even dollar weakness, it's going to go down. So that has to be on your radar. And this brings into play euro. If dollar Swiss goes down, euro's got to keep going up, right? All we end up doing on the hourly charts, we're just moving this short-term trend line from low to low to low, has these short-term little blips. But look at the daily chart. It is going up, right? And it's probably heading up towards 116, right? If once again, if we get this regional banking issue out of play, sterling, okay, once again, we've got a trend line at the top here. It looks set for all money to keep going higher. We just need that dollar weakness. And don't forget, sterling, inflation is through the roof, right? ECB are talking about potentially higher rates. Aussie and Kiwi at the same stage. So the Aussie, Kiwi, Euro, Sterling are in completely different stages of the economic conditions than the US, right? US is at the end of the hiking cycle. These other countries aren't. So it makes sense that they go up. Right, so you look at the Aussie, okay, look, short term, yeah, just hitting a bit of a short-term resistance just above 67, but it is set to head up towards 70 cents. And you'll see a similar outlook here on the Kiwi as well. So across the board, I can see what's happening. We're just not getting the confirmation because of this semi-geopolitical issue in the US regarding the regional banks. And as I was posting on the Discord there, I tell you what, the US, they're such grubs as far as, you know, financial markets, the forces that be and the bigger banks. You can be sure as hell this regional banking issue is something much bigger than what we can currently see. Oil, as you can see, this is like that oil sort of pricing crisis about a year ago where it dropped to -40. This is sort of starting to smell a bit like it. It's good to see oil come back. We're not seeing it on the Bowsers though, but and equity markets, this is the other part of the equation. Now, if the Fed are at the end of the hiking cycle, these instruments should be going up, the equity indices, right? At the moment, they're not because they're caught up in the whole regional banking issues. And these regional bank stocks are getting smashed, right? Which tells me underlying the market's nervous, but there's probably truth around a widespread regional banking issue. And that's going to impact the equity markets. And this clouds the whole issue with what is the dollar doing? Do we buy dollars as a safe haven, or is it just drift lower because everything's completely crap, right? So I'm hoping that we get some clarity around the regional banking issue, because then when you come back and start looking at these instruments, we're going to have some great trading opportunities. And I think the bottom four instruments here, or currencies, Euro, Sterling, Aussie, Kiwi, should all shoot to the top side as the dollar starts to fall away. Equity markets should rally as well. And the dollar pairs, well, they should all start drifting lower. Okay. Dollar CAD, well, we need dollar oil to rally again, but we do have the Canadian employment numbers today. Short-term trading opportunity, probably, but and that's about it. All right, so that's my take on it, guys. It's don't be discouraged, right? When the markets don't give us trading opportunities, it means we're a step closer to building more pressure across the technicals And that creates bigger moves for us in the future. You just have to be patient, wait for the opportunities. When things clear up, we've got trend lines across the board, and we know exactly what to hit, where the dollar should be going, and that's exactly what we're looking for, right? So at this point, I wouldn't expect too much to happen ahead of the major US numbers. As I said, the Swiss National Bank, well, keep an eye on the Swiss CPI. They have been changing rates here and there. So that's the first event you want to be focusing on. And then obviously the Canadian and US employment numbers. Just be aware of the liquidity restrictions at the time of the release. There's loads of US numbers. We need big variance in the non-farm payrolls for this to come into play. The major issue is the regional banks, okay? And you'll see this in the equity markets, right? Today, for the Asian early European sessions, we're going to risk on profile. So you'd be comfortable buying Euro, Sterling, Aussie, Kiwi and selling the dollar, right? That's where we should be going in the future. We just need the banking crisis, the US regional banking crisis to clear up, and that's what we'll get every day, right? There should be cash on the table every day from here. All right, guys, that's it. That's my take on the data today. I'm more focused on the bigger trading opportunity, which is weaker dollar across the board, and that's where the cash is, right? Let's just get rid of this regional stuff, and we'll start to sort of pull a lot more trading opportunities on the table. All right, guys. Oh yeah, just as I finished there too, don't forget Japan holiday today, so the Asia session should be pretty quiet. All right, guys, have a good weekend. All the best. Cheerio.